Michael Burry sells these 11 stocks and warns you, watch before it's too late. There's one person who first predicted the 2008 mortgage crisis, the same person who shorted the market 1 year prior. He was the head of Sion Asset Management before focusing on his personal investments. We're talking, of course, about Michael Burry. You might have heard about Michael in recent years. Maybe you've even watched our other video featuring him, where he talked about the only one stock holding he kept. If you have no idea what I'm talking about, then go watch that video right after you finish this one. Welcome to Wisdom Tank. Today we're going to take a look at why Michael Burry sells these 11 stocks and warns you. Make sure you stick until the end to find out what his warning might mean for the future of the stock market. Don't forget to also leave a like, share, and subscribe with notifications on so you don't miss future news pieces like this one. After being the first person to foresee the 2008 economic crisis, Burry is now someone to trust when it comes to these sort of predictions. This is what makes it more alarming when he warns us about an economical winter he says is coming soon. I could say the same and no one would bat an eye, but when Michael Burry, the famous investor from The Big Short, says it, there's more weight behind the statement. Is this so-called winter really coming? Or maybe Burry is wrong? Let's find out by taking a look at what he sold to brace for impact. Without further ado, here are the 11 stocks Burry sold. Number 1. Meta Platforms Inc. Burry has held Meta stocks sporadically over the years. He initially invested in 2018, and by quarter 1 of 2022, held an 8.83% share, worth over $17.7 million. In quarter 2, however, he sold it all. It's not just Michael though. Other analysts have sensed a depreciation in Meta stock value. On the 29th of July, DZ Bank analyst Ingo Verman downgraded Meta Platforms from hold to sell, attributing a $140 price tag. 1 week later, on August 5th, Needham analyst Laura Martin kept an underperform rating on Meta. This was due to the firm's deteriorating outlook. Number 2. Alphabet Inc. For those of you who never heard of Alphabet, this is Google's parent company. It is a California-based technology conglomerate. Michael Burry bought 130,000 shares of the firm, worth approximately $18 million in quarter 1 of this year. However, he sold all of his shares in quarter 2. On this one, analysts do not share Burry's opinion though. On August 3rd, Alphabet's target price was raised from $183 to $186 by a Tigris financial analyst named Ivan Feinseth. He also reaffirmed a strong buy rating. Number 3. Booking Holdings Inc. You may have heard of Booking, the American travel technology firm. Michael bought 8,000 shares, well worth over $18.7 million in the first quarter of the year. That's equivalent to 9.32% of the total stock holdings. He got rid of all the stocks held in Booking just months later in the second quarter. On August 5th, Shyam Patil, a Susquehanna analyst, lowered the target price of Booking from $2,900 to $2,800, but kept a positive rating on the travel agency. With room nights higher than those in 2019 for the first time since COVID hit, it seems like the travel business is going well, for now at least. Bristol Myers Squibb Company. The American biopharmaceutical agent Bristol Myers Squibb has seen a recent growth not only in share prices, but also in the number of hedge funds that added the firm to their portfolio. Michael Burry sold off his first $22 million stake in the company in the second quarter of the year. Even so, after the results of Q2, JP Morgan analyst Chris Scott kept an overweight rating on the company, while simultaneously raising the price target from $80 to $85. Number 5. Global Payments Inc. Global Payments is a company based in Georgia, which offers payment technology and software solutions. Michael Burry bought 4.53% of the firm's total worth on the stock market, but sold his $9.13 million share during this year's second quarter. Analyst Dan Dolev kept a neutral rating on the company, but lowered its price target from $148 to $132. His reasoning was that the firm likely has several odd inconsistencies. Number 6. Cigna Corporation. Burry's Sion Asset Management added 75,000 shares of the insurance and healthcare firm Cigna Corporation. These represented 8.92% of total shares, with a value of just a little bit over $18 million. As the trend goes on the list, Burry sold all of his shares in quarter 2 of this year. However, Cigna's price target was raised from $310 to $330 by UBS analyst Kevin Caliendo. This price increase is due to the company's outperforming its competitors and lowering the medical loss ratio forecast for 2022. Avinitiv Inc. Avinitiv Inc. focuses on the exploration and production of natural gas, oil, and natural gas liquids, operating mainly out of Colorado, where its headquarters are set. The firm oversees, however, multiple segments, such as USA operations, Canadian operations, and market optimization. Michael purchased 300,000 shares, equal to 8.05% of the company, for $16.2 million in the first quarter, but he sold his stake in the firm shortly after. On July 19th, the price target was raised from $72 to $77 by Neil Dingman, a trust analyst. He also kept a buy rating on the company. Nexstar Media Group Inc. Nexstar is a television broadcasting and digital media company based in Texas. Michael Sion bought 7.13% of the company's shares, representing $14.3 million purchase. Of course, he then dropped it all off in Q2 of 2022. However, Nexstar has seen an increase in price, as per James Gross, a Barrington analyst. He raised it from $215 to $240, while also reaffirming an outperform rating. Number 9. Stellantis NV. Stellantis manufactures automobiles, engines, transmission systems, metallurgical products, and production systems out of the Netherlands for a worldwide client base. Burry Asset Management got rid of their 600,000 shares in this company this year's second quarter. This decision baffled most, as the company's sales have jumped nearly 15% year over year, while its $88 billion revenue is 17% the same time last year, as per a July report. Number 10. Sportsman Warehouse Holding Inc. This company sells camping products, outdoor cooking equipment, sportswear, technical gear, and workwear. Burry dumped $2.6 million worth of shares, 250,000 shares to be more exact, in Q2 of 2022. On June 1st, analyst Ryan Sigadel lowered the firm's target price from $20 to $15, but maintained a buy rating on it. Number 11. Warner Bros. Discovery Inc. Burry's Sion hedge fund invested in the New York-based media company first in 2021 and now in Q1 of 2022. This last purchase was 750,000 shares, worth $18.7 million. All shares were dropped during this year's second quarter. Barrington analyst James Gross, who already appeared once before on the list, downgraded Warner Bros. Discovery from an outperform to market perform without setting a price target. Winter is coming. But why is Michael Burry, famous the Big Short investor, selling all 11 of these stocks? As he puts it, winter is coming. He warns of an upcoming economical crisis, similar to the one in 2008, the very same one he predicted. His history as an investor grants him tons of credibility, so people are understandably scared. What do you think? Are you looking into the stock market? Have you recently sold any stocks? Let us know down in the comment section below. If you enjoyed this video, don't forget to leave a like, share, and subscribe with notifications on, so you don't miss out on any of our future content.